Welcome to the HDIN Research 2026 Strategic Assessment of Bangchak Sriracha, or BSRC. This report analyzes the company's recent transformation from a legacy refining operation into a high-value integrated energy provider within the Southeast Asian market. We will explore the financial pivots and operational strategies driving BSRC's outlook for 2026 and beyond. To begin, we highlight the pivotal shift in BSRC's corporate trajectory. Following the complete integration of Esso Thailand into the Bangchak Group, the company has successfully rebranded over 760 sites. While 2024 presented significant headwinds, 3Q 2025 results indicate a clear financial turnaround, driven largely by operational synergies realized through the ROSE initiative and strategic logistics upgrades. BSRC operates the Sriracha complex, a critical asset representing 14% of Thailand's refining capacity. With a nameplate capacity of 174,000 barrels per day, the facility maintains high versatility, processing diverse crude slates from the Middle East to West Africa. It is a highly integrated complex, supporting both fuel production and aromatics. In the retail landscape, BSRC, as part of the Bangchak Group, holds a 28% market share by throughput volume. This positions the group as the second-largest retail player in Thailand. The combined network of over 2,000 stations provides a robust platform for capturing domestic fuel demand and non-oil revenue. Beyond fuel, BSRC is aggressively expanding its non-oil touchpoints. This strategy focuses on green-innovative destinations that integrate coffee shops, EV charging, and over 100 partner brands. By the end of 3Q25, the company reported 811 non-oil touchpoints, aimed at increasing site traffic and margin stability. Quantifying the challenges of 2024, the company recorded a net loss of 1.68 billion baht. Our analysis attributes this primarily to narrowing global crack spreads and significant non-recurring costs associated with rebranding and IT migration. Despite a 7% increase in revenue, EBITDA margins were pressured by the commodity cycle trough. 2024 performance reveals that the negative ROE of 6.3% was primarily a function of compressed net profit margins. Asset turnover remained strong at 3.7x, indicating that the facility was operationally productive, even while the market environment was financially unfavorable. This leads to the core strategic question facing management. Having achieved record physical reliability and completed the rebranding phase, how does BSRC now translate these operational gains into sustainable, structural financial alpha? In this next section, we examine the strategic framework deployed by BSRC to address the market's complications and drive future profitability. The company's recovery is anchored in the 4E framework: efficiency in refining, evolving the product mix, empathetic community engagement, and a commitment to environmental targets, including net zero by 2050. These pillars guide capital allocation toward high-value growth. A key structural advantage is the multi-point buoy mooring, or MBM, upgrade. By enabling Suezmax and eventually VLCC berthing, BSRC reduces freight costs by an estimated 50 cents per barrel. This logistics alpha directly enhances the gross refining margin compared to regional peers. Product optimization is a core focus. BSRC is shifting away from low-margin exports toward high-margin domestic products, such as asphalt AC 40/50ths and marine fuel MGO. The expansion of the asphalt blending plant is expected to meet rising national infrastructure standards by the end of 2025. The impact of these strategies is visible in the 3Q 2025 turnaround. Net profit reached 343 million baht, a significant recovery from the losses observed in previous quarters. This pivot was supported by a recovery in operating GRM to $6.70 per barrel and the first full realization of synergy benefits. Looking ahead, HDIN Research projects a sustained recovery in the EBITDA curve. As the post-acquisition trough concludes, structural improvements in logistics and product mix are expected to drive EBITDA back toward the 7 to 8 billion baht range by 2026. On a competitive basis, BSRC shows high maturity in refining complexity and retail density. The company's ESG rating remains a standout in the sector, having achieved a 5-star excellent corporate governance rating in its first year of assessment. BSRC's sustainability roadmap is clearly defined. Following the achievement of 4 ISO certifications in 2024, the company aims for carbon neutrality by 2036. This transition includes scaling premium biofuel production to meet shifting regional energy policies. Financial stability remains a priority. The company maintains a healthy debt-to-equity ratio of 1.0x and an A+ stable credit rating from TRI-S. Proactive debt restructuring into long-term bonds has secured the liquidity needed for ongoing strategic investments. Investors should note the ongoing delisting process. The BCP share swap offer is designed to simplify the corporate structure, allowing for more efficient capital reallocation and the elimination of redundant compliance costs across the Bangchak Group. The 2026 outlook is characterized by resilience and value capture. We expect crude run rates to exceed 150,000 barrels per day, coupled with a continued increase in premium product sales and the stabilization of retail market share at approximately 12%. In conclusion, BSRC has successfully navigated its integration phase. It now stands as a structurally lower-cost refiner with a premium retail tailwind. The thesis rests on the company's ability to maintain its logistics advantage while capturing high-margin domestic demand. Thank you for reviewing this HDIN Research strategic analysis. For institutional-grade data or deeper thematic reports on the energy sector, please contact us at sales@hdinresearch.com. We now invite your questions regarding this assessment.